In today's masterclass, we are going to take a look at support and resistance. What do we mean by support and resistance? Well, support and resistance represent key junctures, key points in the market where the forces of supply and demand meet. Support is the price level where demand is thought to be strong enough to prevent the price from declining any further. Support does not always hold, and when we get a break below support levels, it signals that bears has won out over the bulls. A decline below and down through support indicates a willingness to sell and or a lack of incentive to buy at that price level. Support breaks and new lows signal that sellers have reduced their expectations and are willing to sell at lower prices. And in addition, buyers could not be coerced into buying until prices decline below the previous support or below the previous low. Once support is broken, another support level will have to be established at a lower price point. So here we're looking at a chart of the daily ANZ Bank chart, and here you can see down here we had a support where the market came down and held, came down again and held, came down a third time and held, and then moved away. So this is seen as a strong support area. Resistance is the price level at which selling is thought to be strong enough to prevent the price from rising any further. Resistance does not always hold, however, and when the market breaks above resistance, it signals that the bulls has won out over the bears. A break above resistance shows a willingness to buy and or a lack of incentive to sell at that price level. Resistance breaks and new highs indicate buyers have increased expectations and are willing to buy at still higher price points. In addition, sellers could not be coerced into selling until prices rose above the resistance or above the previous high. Once resistance is broken, another resistance level will have to be established at a new higher level. So here again we're looking at the daily ANZ Bank chart, and we see here resistance in this area here. 3 times the market moves up and finds resistance, or actually 4 times here. 1, 2, 3, 4 times the market finds resistance in this area, and each time moves back lower. Eventually over here though, the market breaks above this resistance area and then pushes up still higher to new higher prices. Another principle of technical analysis stipulates that support can turn into resistance and vice versa. Once price breaks below a support level, the broken support can then turn into resistance. A support break signals that the supply forces overcome the demand forces. If the price returns to this old support level, there is likely to be an increase in supply and hence resistance. Conversely, resistance can turn into support. The breakout above resistance proves that the forces of demand have overwhelmed the forces of supply. If price returns to this old resistance level, there is likely to be an increase in demand and support will now be found. And here we see where we have previous resistance at R1, the market breaks above R1 up to R2 to a new resistance point, and then when the market sets back, the old resistance at R1 then becomes support here at S1. Similarly, we break to a new high above R2, and when the market comes back lower, the old R2 then becomes support at now support 2 at S2. So in this masterclass, we've taken a look at various ways of measuring support and resistance. This has been Steve Miley for The Bull, and please do join us again on thebull.com.au and thebull.asia. Stay bullish.